Hello, everyone. I'm back. It's been some time. I've been extremely busy, but I did want to give you a few updates as to what I'm seeing in the market. So we'll talk today about lumber prices, where they're going, what they'll probably perform like over the next 8 to 12 months, and what that means for builders and likely just home prices. I do want to talk about the Austin market. There's been a lot of changes there as well, and what's happening because of that. And then generally, I want to let you know what we're all doing with my clients and how we're investing in the markets today. So the first thing, lumber. I think most of us know, if you're in real estate, if you're trying to buy houses, if you're trying to do remodels to your house or build a deck, prices have really, they've tripled, right, in the last year or two. And studs are costing 12 to 13 bucks today. Typically, on average, they're between $3 to $4 a stud. They have been as low as $2 in the past, but today they're 13 bucks a stud, give or take. Now, in some markets, if you're in a cheaper, affordable market, maybe it's 10. It's still substantially higher than it should be. So when we look at what's happening, a lot of the builders, and this has been happening for some time, they've slowed down production. Right. And they are pouring foundations of their lots to get the house prepared for the framing when the prices come down. They're doing things like having price escalations in contracts to ensure that they're protected on their margins, and everything else in between. So that they're passing prices through on the home. So any home that builders are building right now, prices are going up. Just for example, my project in Arizona, where I'm building homes out there ground up, when we were doing our pro forma, we were estimating selling those homes for $349. Okay, but between $330 and $349. Today, we're listing them at $390, and they're selling for $410. Right, and that's only in about a year. So massive appreciation on the prices there too. So we've been able to absorb those increases in cost because of the price increases. So what this means, though, if lumber is going to come down, which we think it is, it's going to come back down probably to the $8-9 for a stud, and potentially have more purchases by builders at that cheap price point. So you're going to see this M shape, I think, right? So you're going to have the increase right now. It's going to come back down to the bottom. It'll be picked back up by builders and people who need inventory. You'll see a small spike again. And I think it will come slowly back down to the mean of $4 to $5 a stud over the long term. So in my actual investing portfolio, I'm shorting lumber. There's an ETF, WOOD. I'm shorting it. I think it's going to drop. And so I have a risk play there, right? Now, what that means for home prices, well, we're going to see less inventory on the market. I know some people are still pushing the housing crash phenomenon. I've continually said it's not going to happen for a year and a half now, all through COVID, through the crisis. And I've been right. And I've called people out who were calling out for these crashes, and they obviously delete my comments. So pretty funny there. So again, continued price appreciation. It's probably still going to be in the 8 to 12% range for the next year to 18, maybe 24 months. So do look out for that. At some point, the appreciation is going to slow down, right? We talk about affordability in other podcasts here that I've done. You're going to see the mean come back down to the 4 to 6% year over year appreciation. So again, real estate is still a fantastic investment if you can find the right deals, but there are fewer and fewer deals. Okay. So that segue, let's talk about Austin now. That's where my home base is. If you know me, and I've been about 4 to 5 months ago, I was helping people understand, well, if you can't buy in Austin, where else can you buy? And so I was talking about markets up north about an hour and a half, and Manor and Hutto at the time. And I mentioned Kyle and a few other good spots. Those prices are all too high now as well. Okay. In fact, I was trying to get homes just the other month up north, and these homes are selling in 20 minutes. They list them. They have multiple offers within 20 minutes. So anything around Austin is more or less blowing up too fast to really acquire at this point. And rents are not appreciating as fast, right? So kind of a bad scenario there for home investors. But it is okay to look at other areas. And I'll give you a few gems here that I probably shouldn't be telling you, but I'll tell you anyways. There's going to be a massive path of progress to certain areas like Taylor, Elgin, Seguin, San Antonio, New Braunfels, Lockhart, Bastrop, out towards Dripping Springs, all the way up northwest of Liberty Hill, and potentially even past places like Killeen and Temple. Okay. So believe it or not, think about Texas as the way it's shaped. You have Dallas in the far north, going down past Waco, the little tourist town, hitting Austin, right? So Dallas, 2-3 hours south is Austin, hour and a half south is San Antonio. It is going to form in the next 10 to 15 years into one massive MSA. Now, it'll have its own MSA statistics, but it's going to merge into one massive population group. And so really anything from San Antonio up through Dallas that has anywhat near attractive population growth rates, I think is going to be a good market for rentals. Just make sure that all the numbers work. But I think you're pretty much okay if you can find homes in the 170 to 210 range that cash flow. Okay. So that's one of the things that I'm doing. Nothing in Austin makes sense. I just had a client recently that we talked about a purchase they had, and we actually reviewed the numbers and decided that it was best for them to cancel the agreement and just reinvest their money elsewhere and make some cash flow. Okay. So there's that. And then generally what we're doing right now, again, rentals are they're not the best investment. Long-term, they'll be fine. So my clients are still buying good rentals. But if you can't find a good rental, again, we still have the private money lending deals that are still making 16 to 18%. And those have been very successful for our clients. But even those are drying up here and there. Okay. So we're finding less and less deals for our clients to invest in. So what we're having to do, and myself included, is I'm doing land deals, right? And I'm doing it in Texas. And so I have a team on the ground looking for really strong land deals, and I'm allowing my investors to come into those deals, earning a preferred return of 25, 30% on the deal, right? So there are still ways to make money in real estate. Now, I will tell you, land is very complex. It's a completely different beast. I just had a project today that I had to cancel because it was 19 acres, but we found out that there was a gas line running right through the property. So we had to cancel that purchase. My point is, we're now pivoting into the market to find where the margins are. Land is a place where we're seeing a lot of margins. So we are doubling down there with my clients and really going hard at that market where there's a lot of opportunity right now. So that's what we're doing. A different beast. If you want to learn more, give me a ring or email me and we can talk more about land deals. Again, different beast, way more complex. But if you know what you're doing with the right team, there's a lot of money to be made in land deals. And if it's not that, you got to look for ways to manage your money to make 12 to 15+% annually. And then lastly, what we're doing is we're looking for these strong rentals in the path of progress markets that I mentioned, basically Dallas, San Antonio. Stay out of Austin. You can't really find much for good deals there, but there are some good pockets if you do the right research. So I do want to tell you that, again, we do see some relief in lumber. It's going to take some time, but I think we've hit a peak and we're going to come back down to the mean. And across the board, if you listen to the Toll Brothers report, really strong report. Again, housing is doing just fine. I don't see a crash coming. And hopefully you are all staying up to speed in the markets. And again, if you have any questions, send me a note. Happy to help you. And we'll go from there. Thanks, y'all.